move into public hearing on House Bill 1046. And staff, would you please brief the bill?
Certainly, Madam Chair, members of the committee. Again, Melissa Van Gorkum, staff to the committee. Before you is House Bill 1046, expanding housing supply by supporting the availability of public housing authorities to finance affordable housing developments by rebenchmarking the area median income limits. By way of background, public housing authorities, or PHAs, are public bodies established to provide safe and affordable housing for low-income individuals and families. PHAs primarily serve as a conduit for federal-funded housing programs, but may also finance low-income housing development if certain conditions are met. In general, the development must be a 20-year agreement that requires 50% of the dwelling units or 50% of the interior space of the development to be made available to low-income households. For mobile home parks, 50% of the total number of mobile home lots in the park must be made available to low-income households. The low-income dwelling units or mobile home lots of a PHA finance development must be rented to persons whose income does not exceed 50% of the area median income if owned by a for-profit entity, or 60% of the area median income if owned by a governmental entity or nonprofit organization. The bill before you would increase both area median income limits to 80%. A fiscal note was not requested. The bill passed the House 96-0, and there is no companion. That concludes my remarks, unless there are any questions.
Do we have any questions for staff? I'm not seeing any. Thank you very much. Representative Wallen has told me that she's unable to be here to present on her bill, so we're going to go right into public testimony. So, Madam Vice Chair.
Thank you, Madam Chair. And let's call forward in person Dan Watson and Andrew Calkins. And then if we could tee up on Zoom, Mercedes White-Calf, Angela Rosman, and Stacy Valenzuela. That would be great.
Good afternoon. Dan, do you want to start?
Certainly. I'm Dan Watson, advisor to the Executive Director at the King County Housing Authority, and I'd like to wish good afternoon to both Chair Cooter and the committee. KCHA has long been an innovative organization. In addition to our large federal subsidy programs, we have been a pioneer in assembling an unsubsidized workforce housing portfolio that rents units to people earning between 50% and 80% of area median income. The portfolio has been built through the acquisition of existing rental housing, but we're always looking for new ways to ensure new construction that serves this same income segment. The update to the statute in House Bill 1046 would greatly enhance our ability to partner with private entities to bring newly built affordable housing projects to fruition in our region. Rebenchmarking the area median income requirements to 80% of AMI recognizes that today's affordable housing crisis impacts a broader swath of the public than before, and also recognizes significant changes in how affordable housing is financed. Since 1989, we have used rated housing bonds starting in the mid-1990s and have seen the emergence of the housing tax credit program as core financing tools. Regional and community banks are also increasingly strong funders of affordable housing. And today, housing authorities like KCHA have strong AA S&P ratings that enable access to low-cost capital, which is one of our greatest strengths. House Bill 1046 would enable KCHA to leverage its size, credit rating, bonding capacity, and full faith and credit in partnership with private entities to finance housing in exchange for substantial public benefits. We envision that KCHA could be involved by financing a multi-family project with favorable construction loan and supporting the permanent financing through the issuance of taxable debts on the bond markets. By providing some amount of financing, we can negotiate longer and deeper affordability requirements for the resulting housing, and most importantly, the inclusion of a purchase option that would allow us to the opportunity to acquire the property in the future at below what the market rate might otherwise be. Projects would be financed under this provision would add to all other efforts we are doing to advance affordable housing in the region and would not draw on limited tax credits or housing trust fund dollars. Thank you for your consideration.
Thank you. Andrew, welcome.
Well, thank you. Good afternoon, Chair Cooter, Ranking Member Fortunato, members of the committee. I'm Andrew Calkins, also work at the King County Housing Authority and here representing KCHA and also the Association of Washington Housing Authorities. We are pro on House Bill 1046, and just to reiterate, this measure did pass out of the House Policy Committee and full House unanimously. It really makes a simple but necessary update to the Housing Authority statute. Housing authorities play important roles in communities across the state, primarily as administrators of federal rental assistance programs like the Housing Choice Voucher and public housing programs that primarily are serving people earning less than 30% of the area median income. This is always going to be central to our mission, and we're going to work to expand access to these housing resources for the lowest income people where the needs are the most stark. But KCHA and other housing authorities around the state are also working to address the needs for affordable housing for low-income people across the continuum, and there really is a dire need for more affordable workforce housing in our state. In King County, for instance, rising rents have cut in half the percentage of housing affordable to people earning between 50 and 80% of median income over the last 20 years. And so we need to make sure our policies are aligned and updated to address this need. Over 30 years ago, the legislature authorized housing authorities to make loans or otherwise help finance privately owned housing so long as half the units are affordable to people earning less than 50% of median income. This really made sense in the 1980s. At that time, in King County, a family of 4 earning 50% of median income could actually afford the average 2-bedroom rental. Not so much today. You need an income closer to 80% of median income. So this is really just updating an existing already authorized financing tool for housing authorities for the present time and the cost that it really requires to build housing these days. So I encourage the committee to continue moving this bill forward. Thank you.
All right, thank you. Do we have any questions for Andrew or Dan? Not seeing any. Thank you very much. And Madam Vice Chair.
Thank you, Madam Chair. Let's hear now from Mercedes Whitecalf, Angela Rosman, and Stacy Valenzuela. Mercedes.
Okay, can you hear me?
We can. Please begin.
Thank you. Hello, Hello, Chair Cooter, Vice Chair Frame, and members of the Senate Housing Committee. For the record, my name is Mercedes Whitecalf. I'm a member of the Oglala Sioux Tribe, and I'm testifying in support of House Bill 1046 on the behalf of the NAIA Action Fund. Native communities have and continue to experience housing instability. Our counterpart organization, the NAIA Family Center, has partnered with neighboring tribes and governmental housing agencies on local and state levels to build low-income, affordable housing for Native communities in Multnomah County, Oregon. Our goal is to implement similar housing developments in Southwest Washington and the Southwest Washington region. While starting with 1, we now operate 5 low-income affordable housing developments and have seen success as a direct result of joint efforts from the community, our nonprofit, tribal leadership, and governmental agencies working alongside one another to address and revitalize housing needs. Providing housing at a reduced cost creates housing units more readily accessible and available to our community members. The likelihood of Native households becoming houseless in turn becomes lowered, and the Native households that do unfortunately become houseless have the opportunity to exit more quickly with a greater chance of attaining and sustaining long-term housing. This session, you can create policies that open the door for the kind of changes needed to create better housing first solutions. The NAIA Action Fund urges the passage of House Bill 1046. Thank you for allowing me to testify.
Thank you very much. All right, who's ever next can start. Angela.
Hi, I'm Angela Rosman with Natural and Built Environments. We are a small provider of affordable LEED Platinum certified housing in Washington State. With the cost of interest rates, construction, and land, financing for housing of any type at this point is very, very difficult. And with a 50% AMI, it means that small groups like ours are not able to partner with nonprofit agencies, which, as King County Housing Authority testified to, they have better interest rates available, they have different funding, and they can be an absolutely wonderful partner on a lot of new housing. But without that change from 50% to 80%, it just is something that financially projects will not get funded. They simply will not get built. So I would like to say that perhaps we don't think about this as, we're not giving up 50% AMI housing with this change, because right now we're just not getting it built. And 80% also means that we're supporting people who make 55% AMI, 60% AMI on the way up. And so across the board, we've heard over and over again that by 2044, we're expecting to be 1 million homes short in the state of Washington. And we need every single tool that we have available to us to create as much housing as possible. And this would be a small tweak that could have a significant impact as far as housing creation over the next few decades. Thank you.
Thank you. Stacy.
Good afternoon. Thank you, and I appreciate being able to speak today. I am also appreciative of the help with increasing affordable housing. However, I'm concerned it causes confusion and misdirected needs, prioritizing or calling market rate housing at affordable housing with the 70 to 85% AMI. Increasing the medium to 80% AMI, unfortunately, can cause huge amount of displacement for our most vulnerable from public housing and mobile home communities, hurting those who need the help the most. Please encourage our communities, our cities, with the direction of only giving full concessions and tax exceptions to those committed to building or preserving the very low 50% AMI for workforce and extremely low 30% AMI affordable housing units for our most vulnerable low and fixed income residents who already spend 60 to 90% of their income on housing. Regional demographic reports show housing units still desperately needed are for those earning $50,000 and those earning $30K or below. Some living in encampments or in cars and RVs. For years, we are seeing the developers receiving contingencies of 8 to 12 years tax exemption for affordable housing, but only building market rate for those earning 70 to 85K, 112K. I have been in the forefront with helping to share why the manufactured home parks are such a valuable resource. This owned, unsubsidized affordable housing for our city's seniors, disabled, and low-income residents. Several hundred residents are being displaced, as rents increase. And most earn under $25,000 a year, but they're unsubsidized. This is great. The problem with homelessness keeps growing. Again, most of the funding for the affordable housing seems to go for the higher housing AMI of 80%. I'm concerned that adoption of this bill encourages support to higher income earners at the expense of the very low affordable housing and increasing the homelessness, protecting the shelter that is working right now for our most vulnerable incomes by retaining these at the current low and extremely low affordable housing and remove that part from this bill. The rebenching to 80% wage earners will force out those in need. Does this really make sense? Does this really help where most help is needed to curb our homelessness? Thank you.
Thank you, Stacy. And I do want to say that we are definitely concerned about those in the 50% AMI bracket and below as well. And I appreciate what you had to say. Thank you. Do we have any questions for these panelists? I'm not seeing any, and that was our last testifier. So with that, I'm going to close the public hearing on House Bill 1046. And we are going to move into executive session, and I'm going to ask staff to